Jim Simons. Yes, strap in because we're diving into the numerical maze carved by the king of quants whose Medallion Fund at Renaissance Technologies generated a mind-boggling average annual return of 66% before fees. And this impressive track record was not achieved for only a few years, but over 30 years from 1988 to 2018. And even after hefty fees, the net return stands at an incredible 39%. To provide some context, the S&P 500 clocked an average annual return of about 10% in the same period. Simons isn't just beating the market and smashing records. He's pulverizing them into number dust. So, gear up, fellow number crunchers, as we decipher the genius behind these jaw-dropping numbers. Now, we've all heard that compound interest is the eighth wonder of the world, and that he who understands it earns it. He who does not pays it. Well, get ready to understand just how potent a tool it can be. Picture this. You're an investor with $1,000, eager to grow your money tree. If you decided to invest it in the S&P 500, with its average return of 10% annually in 30 years, that would grow to approximately $17,449. Impressive, right? Hold on to your calculators, folks, because here's where it gets downright ridiculous. If you had the golden ticket to invest that same $1,000 in the Medallion Fund with an average annual return of 66%, at the end of those same 30 years, you would not be looking at a mere $17,449. Oh no, that $1,000 would have exploded to an astronomical, wait for it, more than $4 billion. Yes, folks, you heard that right. Billion with a B. If that doesn't redefine growth, I don't know what does. That's the insane power of compounding at a 66% annual return. Your investment does not just grow, it multiplies at a rate that would put rabbits to shame. So next time you're thinking about the world's wonders, remember, there are the pyramids, there's the Great Wall, and then there's the compound interest of Jim Simons' Medallion Fund. Now that's a wonder worth marveling at. Now, with these mind-boggling returns, you can expect the fee structure of the Medallion Fund to be nothing short of legendary. While a typical hedge fund charges a 2% management fee plus a 20% performance fee, the Medallion Fund dances to a different beat. We're talking a 5% management fee and a whopping 44% performance fee. So, why do investors cough up such hefty fees? Well, it's simple. The returns are just that good. When you're consistently raking in 39% annual returns after fees, you can't afford to pay the piper his due. So yes, the Medallion Fund is expensive. It's like the luxury penthouse suite of investing. But just like that suite, the view from the top makes every penny worth it. Because at the end of the day, when you're outpacing the market by such a staggering margin, you're not just winning the game, you own it. Born to a shoe factory owner, Jim Simons was a math prodigy with an insatiable hunger for numbers. This Brooklyn-born codebreaker transformed his passion for problem-solving into a multi-billion-dollar empire, proving that the secret sauce of Wall Street might just be hidden in the complex equations of advanced mathematics. Armed with a PhD from UC Berkeley, Simons taught mathematics at MIT and Harvard, and then went on to crack codes for the Department of Defense during the Vietnam War. Let's just say he had a beautiful mind before it was cool. This inherent ability to perceive patterns where others saw chaos set him apart from traditional Wall Street tycoons. In the late 1970s, Simons founded a small investment firm, Moneymetrics, in an old converted bakery. The initial investment strategy of Moneymetrics was quite simple. They started by trading currencies. With time, they began applying mathematical models to financial data, aiming to anticipate future currency trends. This fledgling firm was one of the first to harness the power of computers to improve investment decision-making, a pioneer in the wild frontier of quantitative investing. However, it wasn't all smooth sailing. The firm had its fair share of failures and successes, which in turn fueled the refinements and evolution of the mathematical models. The sheer complexity of the financial markets demanded constant adaptation. It was like unraveling a Rubik's Cube that's forever changing its pattern. Challenging, yes, but Simons and his team were undeterred. Over the years, the focus expanded from trading currencies to commodities, futures, and equities. So, how did Renaissance Medallion Fund turn Wall Street's traditional investing methods on their head? Number 1. Hiring and retention unique strategy. By the mid-1980s, the firm, now renamed Renaissance Technologies, was already showing signs of its future prowess. A key to Renaissance's success lies in its unique hiring strategy. Simons hired not financial experts and Wall Street veterans, but quant analysts, mathematicians, physicists, astronomers, and statisticians who were fluent in the language of algorithms. Why? Because he believed in the power of unemotional, data-driven decision-making. Imagine a team of Sherlock Holmes, but instead of solving crimes, they're solving the stock market mystery. And to retain his superstar team, Simons created a profit-sharing system, offering staff a piece of the profit pie. This eat-what-you-kill model ensured that everyone had skin in the game. Their hard work directly translated into a chunk of the massive profits the algorithm churned out. Talk about a motivation booster. It's also important to note that the Medallion Fund was closed to new investors in 2005 and now only accepts employee investments. By keeping it in-house, Renaissance minimizes the risk of its secrets leaking out. Plus, it's one hell of an employee perk. Number 2. Profiting from anomalies. By blending quantitative trading with advanced technology, Medallion employs complex mathematical models to analyze patterns in global financial markets, making high-frequency trades that capitalize on minuscule price discrepancies that vanish within seconds. One such example is identifying persistent mispricing in futures contracts. Through the power of pattern recognition and mathematical modeling, Renaissance was able to spot these discrepancies and capitalize on them. This technique, often referred to as statistical arbitrage, is like Indiana Jones snatching up the golden idol before the boulder comes crashing down. Number 3. Mean reversion. This strategy banks on the assumption that the price of an asset will converge to its average price over time. Picture a pendulum swinging back and forth. Even if it sways far to the right or left, it eventually swings back toward the middle. This is the essence of mean reversion. Renaissance mastered this, creating models that could predict when a pendulum-like swing in price had gone too far and would likely snap back. It's like being able to time a high-stakes game of tug-of-war. Number 4. Using leverage. In the world of finance, leverage is like adding rocket fuel to your investment. It's the use of borrowed money to increase potential returns. Renaissance was not shy about using leverage, sometimes borrowing several times the amount of capital they had. It was risky, but when applied with their high-accuracy models, it supercharged their earnings. Number 5. Embracing AI. Last but certainly not least is the strategy of letting machine learning and AI do the heavy lifting. By incorporating these cutting-edge technologies into their system, Renaissance could test countless models and refine their approach with a speed and accuracy that would make a human brain dizzy. In the end, the genius of Renaissance Technologies was not just in the strategies they used, but in the way they combined them. It was a symphony of number-crunching, pattern-spotting brilliance, conducted by the maestro himself, Jim Simons. And as we've seen, when the orchestra played, the profits danced. But remember folks, while we might all dream of investing in the Medallion Fund, it's now a closed club, available only to employees and select invitees. It's like the financial version of the Oscars. Only the elites get an invite. And while we can't all be mathematical geniuses, we can undoubtedly learn from Simon's unique approach. As you embark on your investing journey, remember that the markets might not speak in words, but they do speak in numbers. Learn their language, discover the patterns, and who knows, you might find your own financial holy grail. Don't forget to like, share, and subscribe if you loved this numerical roller coaster ride. And tell us in the comments which financial wizard we should decode next. Until then, keep learning, keep investing, and may the numbers always be in your favor.